So what we're seeing now that the Fed has rolled out it's another $700 billion in direct stimulus. And what we're seeing is it's not really having an effect on the market. I'm going to share my screen here with you all to show you that, assuming I get right. Gold. Where did my S&P go? Okay, so I'll start with this screen here.
I show the S&P down 8.16% as we speak.
Oh, great. All right, so 8.16. So still a severe down day. 8% one day is it's not unprecedented, but it's not more.
It's a drumming. It's a drumming.
It's a drumming?
Yeah.
Okay, so here's the S&P. We're looking at the day look. Let's take it to a 5-second look. Okay, so currently the S&P's falling dramatically. It topped out at about 3 o'clock here just a couple of minutes ago at 2,500, but now it's fallen through 2,475 and it's still falling. So this has really been the case. Look here and see that throughout the day, as we pull back through the hours, it's basically been a situation of ups and downs all day long. Let's go out to the one-day look here. Okay. And here we are on the 16th. As you can see in here, Dow opened with this huge drop, 2560 and change. It opened at 2440. And then we saw this little rush up to 2520 from the open till 1130. And after which it started selling off again, and it almost got to where it opened, but it is now sort of making another bounce. The takeaway, I guess we can say safely, Ed, that this thing ain't going to be over anytime soon.
Yeah, for sure, James. And I heard a couple things today about the airline industry. I mean, the airline industry has to be the poster child, that group, transportation, whatever you want to call it. I think some of the big airlines in the States have said, all long-term trips are going to be scaled back 90%. 9 out of 10.
Wow. Well, that's going to have a devastating effect on airlines who operate on pretty thin margins as it is. Isn't the airline model at 80% we break even? 80% occupancy, they break even. 90% they make a little money. 100% they're making great money.
Yeah, and even if it was 75 or 70, I mean, look, we're going to see things that we just didn't expect. You know what? Maybe we're going to see some bankruptcies in the big airlines.
Right. Effect on airlines who operate on pretty thin margins. Yeah. Okay, so I'm looking at the gold chart here. I'm going to share that with everybody now.
Okay.
We've got a stunning 21 people in the audience here. Thank you guys all for tuning in. Of course, I'm sure you're interested to hear what we could possibly be saying that's what isn't being said on mainstream CNBC, etc. Let's just say that you're not going to hear much here what you're going to see on CNBC. Okay, so I'm sharing my screen. I need to maximize this. There. You're seeing the gold futures at June 2020. Currently trading at 1505. Is that what we're seeing on the screen here?
I don't see a chart right now.
No?
No, I don't see the gold chart. Sorry.
It's because you entered in full screen mode, James. So get rid of full screen mode. It won't allow me or Ed see.
Okay. Go down from full screen. Let's go back into. Uh-oh. Whoa. Okay, let's go back to. Oh, am I still in this meeting?
Yep, I have you. I see you.
Okay.
Great. We're just not seeing you full screen, so we're not seeing you anywhere. It's just saying James West has started screen sharing. Double click to enter full screen mode. But
how about now?
I see. Don't. We're on the donal now. Huh.
Well, okay. Well, this is interesting, everybody. You can obviously see that we're experimenting with Zoom, which is our new work from home coronavirus social isolation platform, and Donald is producing from his home, and that's just a bit weird.
You know, we can talk about some of the sort of the things that you heard that you thought you'd never hear. For instance, I heard recently that Starbucks has taken their seats out of their shop, so people will just get their stuff and move on. You know, they don't want them loitering around.
Interesting. Okay, so Faye Smith is here. Going Postal is here. We have a few people in the audience. Peter Widener says, we see you now. Okay. All right, let's get this party started. So, I got a couple of things here. First of all, the Fed has now launched a total of $5.4 trillion worth of extraordinary injection, stimulus, quantitative easing, whatever you want to call it. They've boosted the fabricated capital out of thin air by another $5.4 trillion, and the market has yawned and carried on selling lower. That's one major issue that we should be looking at as a harbinger of what's to come. Second thing is the Fed has removed the capital buffer limits that banks have traditionally had to have on hand as a stopgap measure to have assets to sell in the event that their own liquidity falls under certain levels and they have to sell assets just to make their own cash calls. An absence of things to sell was what took down Lehman Brothers and took down Bear Stearns. And that's why the capital buffers came into play, because as asset prices fall, covenants cash even among the biggest banks. So there is no bank that is immune from cash calls because they're all levered up, meaning that they're all lending out money at a multiple of their total value should they have to be sold for parts. And so the fact that they have eliminated that last ditch defense line of defense for banks, capital controls, in an effort to get the banks to lend out the money, that's one thing we have to consider as a sign of increasing desperation on the part of the Fed. Clearly, the same measures that worked in 2008 and 2009, quantitative easing and zero interest rate policy, are not having the same effect. And so the question becomes exactly where is this going to go? What do you think, Ed, is going to happen with the S&P based on your look at the technicals?
Well, you know, again, I'm going to qualify everything I say by saying that we're in historic times, but right now you'd have to say the route isn't over. I don't see any signs yet that we've seen a bottom, and we're down close to 30%. Okay, yeah. I think that's the number that's being bandied about. But you know, you want to see something where there's some kind of reversal or some kind of candle where you got a monstrous long tail. But we haven't seen anything yet that would suggest that things are going to get better before they get worse. Yeah. And until, you know, and again, I'm bringing in fundamentals. The S&P, certainly can go down another 10%, couldn't it? I mean, it's already gone down 30.
Well, one of our associates called me and said, "Where's the bottom in this plummet?" I said, "How about Dow 14,000?"
Wow.
14,000, partially in jest, but not entirely in jest, because that's not unreasonable.
The Dow, as we speak, is down 9.22%. It's just a snick above 21,000. Wow, wasn't that long we were talking 29,000, right?
Yeah. Holly Moore, one of our viewers, is asking, guys, have you pulled out of the market, or do you hold and hope to recover? speaking strictly for myself, Holly, I can say unequivocally that I have pulled right out of the market. In fact, the only thing I have left to sell is things that I can't sell in terms of stocks. And the only thing I have that I can sell is the thing that I wouldn't dream of selling, which is my farm. So I bought the farm, not in the biblical sense, but in the actual sense. And I'm not going to be selling that.
You know what, James? I think a clue as to what the Dow or the equities might be if we keep our eye on treasury rates, because as you know, the bond market is so much bigger than the stock market. So if we can get an idea of when rates stop dropping precipitously, that might give people the confidence to step back into the equity market. But as long as we've seen this Fed slash and markets don't even care. Nothing. If they would have done nothing, the same effect would have probably happened today.
Yeah. Well, it's interesting how on CNBC they're talking about the restructurings that will have to happen in the marketplace. And really, it's the restructuring of the entire financial system that needs to occur before any kind of reality can set in. But I don't see that happening voluntarily, given the of leaders we have in the Federal Reserve or at the national level in any country on earth. There's nobody anywhere qualified to lead this financial system through a restructuring. Nobody has the political willpower. Nobody has the depth of financial literacy required to do so. And in fact, those who do have high degrees of financial literacy avoid government and positions of leadership like the common plague. So basically, we're in a tough spot.
Yeah, wouldn't you agree that all the things we've seen the authorities do, when I say the authorities, the Fed, the this, the that, the government, I mean, really, we're only seeing more of the same, really, that more QE, rates being slashed,
Where does it end?
It's interesting. It's interesting, but I think the system is broken. It was broken, and they kicked the can down the road for 10 or 11 years, but now the proverbial chickens have come home to roost.
Yeah. I think that's a good point. There is hope for the future, though. I mean, looking on the positive side, we're going to see a solution to the oil price war among Saudi Arabia, United States, and Russia. At some point, that is going to catalyze a positive sentiment in the market. We're going to see the coronavirus. I mean, I'm assuming this. Nobody really knows for sure, but by all indications, if we look at China's example, the coronavirus has about a 3-month window of influence on the general health in a society before it starts to recede. Couple that with the idea that we've started human trials across certain vaccines as well as certain treatments for COVID-19, the disease that derives from the NCOV virus. We're looking at a picture down the road, call it 4 or 5 months, where the oil crisis, the oil price war has been solved, the coronavirus is receding, the system has been completely overstimulated with cash, and I gotta think that at the very least, it's going to enable a kicking of the can even further down the road until this crisis situation reasserts itself at the next macroeconomic, geopolitical / medical emergency that happens on a global scale.
Right. Well, certainly now, certainly the market does have room to go up. If in fact things started to turn, but I just can't imagine things turning quickly. I just think it's going to be a slow, a lot of people are talking about a V-shaped recovery where, you go down, you go back up almost in a symmetrical fashion. I don't see that happening. I think we got to muddle around here at the bottom, be bottom feeders for a while before this thing can catch a bid. But anyway, the Dow is down 9.25%. That's a big drop. It was said earlier that this is the worst month that we've had since October '87. October 87.
Boy, I think after today, that becomes a moot point. This is the worst month we've had since 1929, I think. And, we could be heading towards a 1929 type of deep economic recession catalyzed by this coronavirus. I mean, because there's the thing. The weakness in the financial market, though catalyzed by the coronavirus, is actually a separate issue from the growing weakness in the financial system as a result of continued quantitative easing, stimulation, low interest rates. I mean, all that money is going into the upper layer of the banking system, and it does not filter down into general economic activity, which is the premise under which quantitative easing has been justified by successive governments since 2008. Now, we're starting to see repeatedly that quantitative easing and zero interest rate policy in an overstimulated, overliquefied marketplace that only serves the upper layer and does not filter down into the economy actually has the effect of destroying economic activity at the most fundamental level. Where is this heading? I think this is heading towards a revolution of sorts. I think that people are going to take to the streets. I think it's going to get to the point of civil unrest, particularly in the United States, where the income disparity and the availability of money to spend on just basics is a lot more divergent than it is in social net, a little bit more robust than it is in the United States. And in Canada, you only sleep on the street if you want to. I mean, that's the bottom line. Nobody sleeps on the street because they have to. And that's not the case in the United States.
Somebody sent me a video, or not a video, but a picture of a gun shop in LA where there was all kinds of people lined up waiting to go in and buy guns. Now, I'm not trying to get people nervous here, but that's what that if things get really ugly, anarchy ensues.
Right. Well, yeah. I mean, people buying guns. I mean, look at the doomsday preppers. Look at the people who, the most extreme variety of doomsday prepper loads up on guns, loads up on food, loads up on ammo, and sits on their porch and waits. Well, those are the ones we have. The guys who are in essentially a defensive position. They want to protect what they have against people who would take what they have. Where the breakdown in social fabric occurs is when people who don't have reserves, who only have weapons and a willingness to prey upon others, start to form groups. Currently, we call them gangs, but in the future, they may be called armies, private armies, start to go out and seek to take over control of stockpiles of food and ammunition from others. That's when things get really weird. And, you can't really say what's going to happen. Certainly, we've seen lots of fictional representations of what could happen. I don't know if you saw the movie The Road. Had Vita Morganson in it. And it's about this era where it's collapsed so far that you're essentially forced to rove in search of food, and you're constantly encountering variously bands of sexual predators, bands of cannibals, and then just gangsters a la Mad Max who are fighting over every last scrap of anything consumable. I mean, those are all pretty ugly scenarios, but certainly we're not that far from that. Given the hoarding that's now going on, given the size of the population relative to the global inventory of area. And this is where overpopulation really asserts itself, not as an ideal economically, but as a fundamental rule of proportionality that nature seeks to educate us about, and which we have chosen to ignore the current iteration of human beings. And, that's the worst case scenario. That's down the farm. I don't own weapons, but I know people who have weapons, and they're welcome to stay at my farm. Are you drinking beer, Ed? Because that's an excellent defense against both coronavirus and volatile markets.
There's nothing wrong with a cold beer on a Monday afternoon when all else fails.
when all else fails. Boy, that might turn out to be quite prophetic in the least. So I guess the one thing that if we're going to look for what to buy, like where are you going to put what money you have? So my position is I pulled all my money out of the market, and now I've got some dry powder that I hope to deploy in order to take advantage of the reversal that at some point must come in some asset classes. For me, that's going to be gold. And all I'm basing that on is my look back to 2008. When all the commodities crashed, gold was the one that first jumped up and reversed strongly. It actually began its march to its all-time record high of $1,920 in 2011. And that was roughly 3 times the price of gold at the low of the financial crisis in 2008. And so if gold went from 600 and change to $1,900 and change in, what was it, 2 years?
2 to 3 years. So let's say 3 years from
Right.
08, August of 08 to September of 11.
Yeah. So if you can make 3x your money in 3 years, that's 100% a year.
I'm looking for clues to tell me that something's changing. I want to see Dr. Copper catch a bid. Dr. Copper is in the shithouse. Like, it's 236, 237. Palladium has dropped from, they're using it in catalytic converters. That's oil. Maybe we need to see oil catch a bid, at least back to $40 or something. I don't know, but something's got to tell us that something's changing. Right now, nothing's telling us anything's changing that I can see. Although gold has firmed up a bit. Well, it's not down as much as it was. It was down about $65. I think right now it's down about $25.
Wow. All right. Well, so what else have we got to look for? We've got the coronavirus task force speaking at 3:30 this afternoon, according to our audience member, Kook69. That's a nice handle, Kook. Thanks for joining us today. Yeah, I mean, what else have we got to look for today? Really, it's basically time to crack open the wine and, live to fight another day, I guess.
Hopefully we can start to see. I mean, if the world starts falling apart, somebody told me that they saw gasoline at a Costco store at 75 cents a liter. It's a long time you don't see gasoline under $1 a liter, let alone 75 cents.
No, that's true. That's true. Yeah. I guess stockpiling gasoline because it's so cheap makes sense right now. That's interesting.
And if it gets a little cold, you can always light it.
Yeah, there you go. All right. Well, so let's sign off for now and see what happens with the coronavirus task force. We'll jump on for a post-task force commentary at 4 p.m. So if you're watching now, we're going to jump off for half an hour and come back and join us at 4. Does that work for you, Ed?
Yeah, sure it does. And by the way, I just saw Tilray, which hit $300 not this year, last year sometime. I just saw it at $370.
Yeah, well,
there you go.
Talk about, or rather, the cannabis industry, which is clearly got a serious case of coronavirus. So we'll be back at 4 o'clock, everybody.